Ladies and gentlemen, it is 7:58. We're a couple minutes early because Glenn and I like to be early. It's Monday night, Novak News. More to come in a minute.
Well, thanks for that little, seeing through that little technical difficulty. We had two topics. We had the choice. We could either talk about market predictions for next year.
That's my choice.
Or we could talk about the Epstein P. Diddy list.
That's your choice.
That was my choice. We can't talk about that. Everyone voted against me. But I will say one thing. Billy Jury's headed off overseas.
Coincidence?
Coincidence? Or is there something more? All right, let's get into it. Predictions, real estate, DY, Northern Beaches, 2025. We're almost seeing out the 2024 year.
Yes.
And studiers of history will understand that the best way to predict the future is see what happened in the past. So we're going to talk a little bit initially what 2024 looked like in real estate in the DY area. Stevan.
It's a good point. I mean, obviously coming off the back of a market that was really dictated by interest rates, real estate leading into 2024 was a little bit uncertain. Different markets react differently when you look at commercial as opposed to residential. But sitting here today, close to midway through December now of 2024, we say the market was actually pretty good, and if anything, probably followed the normal trends that we would expect to see, even in light of uncertainty with interest rates and everything behind it. Yeah,
look, 2024, we saw more stock on the market than in 2023. We saw most of the 2% fixed loans expiring, and then people making decisions selling investment properties. DY consists of 11,000 dwellings, and I would say 90% of them are apartments, and 50% of the apartments are investment properties.
Yeah.
So we did have, good stock numbers. That's resulted, I think, in a bit of weariness in the market coming into the later half of the year. And we've been left with a bit of stock on the market. And across Sydney, there's been decreasing auction clearance rates. So last week was 51 as recorded by Domain. Northern Beaches fared a bit better. The Greater West, there seemed to be a lot more properties just passing in or not taken to auction. Same time last year, a bit less stock. Interest rates, do we have increases from December 23? I think we did. Interest rates still on the rise. Clearance rate was 55%. I think that 51% would be lower because there were a lot of unreported auctions. And
true.
A lot of people don't like telling bad news, especially when it involves them and their vendor. That's left us at the moment with 573 properties still for sale, with I think the sign out the front says 9 days to Christmas. That number was 38.
Yeah.
Oh, sorry, 381.
381.
Don't say yes.
What do you mean 381? When was it 381?
381 was in 2023, same time.
Wow.
So,
but I would like to say that 381 is very low. What are we saying today? 5. Say Glenn, sorry.
Yeah,
that's still not that is not a huge number.
We're saying in the 500s.
In the 500s.
500 properties won't get a gift from Santa probably this Christmas.
They might.
They won't.
Some might.
Some might.
The good boys.
Some might get a Christmas Eve sale, but there'll be properties that go into the new year, and there'll be strategies for the agents to get those properties sold. What I will say is it's been a real meet the market sort of market, whereby owners, especially in the later half of the year, haven't been able to dictate price so much on standard properties. They have on sort of that dream or cream property, but on standard properties, they've really had to say, well, this is the best offer I've had in the last 30 days. I'll take it. So moving forward into the future, Steph, what does the future look like? A slimmer, more attractive you?
I'd like to think so. Probably with less hair, to be honest with you. But we'll see how that prediction goes. Look, if you're following the news, and a lot of people do make their property decisions based on what they see on the box when they get home after a day's work, the message is mixed. They're saying some articles and news reports coming out that the market is going to take off in light of reducing interest rates and discussions around that. Then 20 minutes later, there's another news story on how the property market's about to crash. So, look, I think personally it's going to be probably a pretty stable and positive year, and a lot of the indicators coming out of the more major real estate portals are suggesting that as well. We've printed off some information here anyway. This is all sourced from Domain and their property reporting team over there. But look, they're looking at, I'll go through them through the combined capitals of 5 to 7% increase, which is pretty much on par with what a normal increase year would look like. Look, 5% is probably towards the lower end, but a 7% is pretty average, and a 10% is a strong year. So the numbers that are being broadcast, and not only through Domain, but through some of the other more major, statistical real estate property portals, are all very similar. So look, we'll go through Adelaide. It's projected to be one of the stronger performers, 7 to 9% growth for 2025. Brisbane, 5 to 7%. Canberra, 3 to 5%. Canberra had a very good year this year. Real estate prices, but still looking up. Brisbane as well. Brisbane, tipped to be a strong performer again. Melbourne, 3 to 5% again. And look, I don't know, sometimes the Melbourne numbers are a little conservative. Perth, big upshot, 8 to 10% is the projected growth over there. And then, of course, Sydney, 4 to 6% across the Sydney market. Now, look, we don't. Glenn and I typically don't work across the other capital cities, and we do work within a bit of a specialised area here on the northern beaches of Sydney. But really what we're seeing is that our market here, particularly, is a lifestyle-driven market. We're close to the beach. Transport's improving, but we're not really based on the back of infrastructure or anything like that. Really what drives our market here is access to money, home loans, lending. So. And if indicators are projecting a decrease in interest rates, then that typically means a moving market across the northern beaches market.
Yeah, what's interesting with that Domain forecast, in Sydney, it's 4% to 6% for houses, 4 to 6% for apartments. So that would show, generally, it would be 4 to 6% for apartments and 6 to 8% for houses, but it's showing that affordability is slowing down that houses growth. Not desire, not people saying, I want to live in a strutted unit with someone above me, and someone below me. It's just houses are becoming so expensive that the growth is getting parity.
I think one thing also, Glenn, that I think is a little bit off topic, but you and I, we've obviously faced it a lot in the last 12 months, is just the number of properties that we're selling in a strata title that have got increased levies or special levies or some level of work coming up. I've never seen it this high across the northern beaches previously. Look, it's a good thing. They're looking after real estate and the property and I guess the hard stuff. But big increases in strata levies across there. How that might pretty pricey.
Well, I think it's more a change of how our body corporate committees and also the strata managers are setting up a 10-year plan, and they're engaging specialists and engineers, waterproofing engineers, all sorts of engineers for the building, structural engineers, and they're looking for problems. And, on an old apartment or on an old car like my Falcon, if you look for it, you'll find it. And they're finding these things and then rectifying them. And I think there's a whole industry around it. Most of the units in DY I would say 60% are double brick, 1960s to 1980 concrete slab construction. Not much goes wrong, but still coming up with huge strata levies. There's a little bit of oxidisation in the steel and concrete, Spalding being close to the beach. But I do think there's an industry in looking for these problems and then getting ahead of them. But it's costly.
Yeah,
it's costly.
Do you think that'll impact apartment prices?
I think anything. I think anything impacts it. Okay, interest rates don't go up, but a lot of properties are carrying special levies, 40, 50,000. So that will slow prices down. A property may have a levy of 40,000 to pay a special levy, and you find a property that doesn't have one, but are you confident that the one
that's
in the future? Are you going, well, old Uncle John says to you, oh, they haven't got the levy now, but it's coming. And, people pull back on their price a little bit. So it's interesting to see units still going ahead. My prediction for next year is I don't know of a lot of stock coming on. I know I've got a couple, but I normally have more. I think it might be a wait and see approach. I think there'll be a bit of a clean-up on properties, the 500 odd properties that are left on the beaches. They might change agents, and get a fresh approach. And then I think unless we get some relief on cost of living, our prices will remain a little bit stagnant. I think that will go until we get a little bit of rate relief, which doesn't seem to be anytime soon. It seems to keep being pushed back.
Yeah, there was. 3-4 months ago they were saying February they'd be expecting some kind of a decision. Then I think I heard the RBA came out and said, "Oh, look, we want to see 2 more quarters of statistics, which would mean this quarter now ending in December, and then I guess the first quarter of 2025 before they make any kind of an assessment." So it may very well be till the end of financial year, middle of next year, that we do see any kind of movement on the rates.
Well, the last guy from the Reserve Bank that came out and made a bold statement, he decided to retire early. So I don't know if the others want to decide to retire early either. So it's quite cautious in that respect. Whether it needs to be that cautious or whether it's people protecting their jobs, I don't know. But and I think there is a two-tiered economy. I think there's some people with great wages, whether it's 6%, whether it's 5.2, it doesn't really matter. And I think this area could be one of those areas. So your auction clearance rates are still pretty high, but you go out to Western Sydney, where both mum and dad are working, and they've been holding on, and then Christmas comes, they have a bit of a blowout. Some of these repayments are going to get pretty hard. The time that most businesses go bankrupt, and that's why I thought they'd have a look at rates over this Christmas period. It's generally March, because they, all their BAS payments pile up. They don't get much trading unless they, have some sort of Christmas trading over that period, and that's normally the period. March, April, they start winding up. So I thought they might have done that, reduce them to inject a little bit of hope into the economy, but it doesn't seem that way.
Yeah, right. We'll keep an eye on it.
So Stev's prediction is
going up.
How much?
I'll be conservative at 5%. I think we'll see by this time next year. I'll say 7%.
I think across Sydney, we'll probably see about 5%. I think on the beaches, we'll see a little bit higher. I think top stock will be a bit tight. I think a lot of people will take a bit of a wait and see approach if they're offloading an investment property, and they'll wait for the rates to come down.
Okay. Well, time will tell.
Time will tell.
What happens if we should have a wager on this, Glenn?
We should.
We'll keep that off there.
We'll have lunch. We're only dealing with 1%. So I've got to say something. I reckon. What are you going to say? 6%? 7%. Okay, I'll say 3% between now and financial year.
What about end of year?
End of year, I reckon another 3%, 6%.
There you go.
All right.
Ladies and gentlemen, thank you as always for joining us. We look forward to seeing you again.
And our family, that we can see that you're watching at the moment. Thank you very much.
Thanks, guys. See you soon.
Good night.
Bye.